Imagine this, you wake up, check your phone, and see that IndusInd Bank, a major private bank, has lost over 25% of its stock value in a single day. You scroll through the news, and it's everywhere creating chaos and panic among the investors. Everywhere, analysts are throwing out warnings. WhatsApp groups are flooded with conspiracy theories. What just happened? Is IndusInd Bank the next Yes Bank? Or is this a once in a lifetime opportunity to grab a fundamentally strong stock at rock bottom prices? So buckle up, because by the end of this video, you will know exactly about the recent IndusInd Bank's turmoil, which caused its share price to tumble down, know about its financial health both fundamentally and technically, how IndusInd Bank compares to giants like HDFC Bank and ICICI Bank, what's the road ahead, and most importantly, whether you should buy, sell, or stay away from it. So let's unfilter it. March 10, 2025, a day IndusInd investors will never forget. Out of nowhere, the bank drops a bombshell. They reveal a 1500 to 2000 crore hit due to accounting deviations in their derivatives portfolio. This loss is not because of a failed investment, but because of how the bank did accounting for certain derivative transactions. Let me explain you very simply what it means. Imagine IndusInd Bank has 1 billion US dollar deposits from its customers. These deposits earn only 2% interest in the United States. But in India, the bank can lend in rupees and earn higher interest rates. So the solution is the bank decides to convert these dollars to rupees to earn higher interest rates in India by using a cross currency swap, which is a derivative contract, so that it can hedge its currency risk. So what is this cross currency swap? A cross currency swap is like an agreement where IndusInd Bank exchanges dollars with rupees from some foreign bank, which it can convert back to dollars in the future date at a fixed rate, so that there is no currency risk. So basically they are trying to save themselves from the fluctuations in the rupees and dollar currency exchange rate. So far so good, no problem till here. The bank was doing all good till here. However, what IndusInd Bank did wrong was, as soon as it entered into this derivative contract with the foreign bank, it booked profits immediately, assuming they would be coming anyhow in the future. Why? So that their financials looks very strong and profitable, ensuring that their share price would increase. However, exchange rates and interest rates change over time, which means these swaps can fluctuate in value, sometimes showing gains and sometimes losses. और यही हुआ. In financial year 2024, the US Federal Reserve increased the rates to sharp 5% from the existing 2%. This meant that IndusInd Bank now had to pay much more interest on the contract than it had originally expected, which was around 2%. So what was the impact of the interest rates change? IndusInd Bank was expecting to earn a 4% profit from this interest rate difference, 2% US dollar and 6% INR. But when US dollar interest rates shot up to 5%, this gap shrunk or even turned negative. The expected profit on this swap contract disappeared, and IndusInd started losing money on the trade. So the bank started its second accounting mismanagement strategy by spreading out the losses over multiple years instead of recognizing them immediately. This made quarterly profits look stable and avoided sudden stock price drops. But then came the shocking news for the bank, as new Reserve Bank's rule came in 2023, which forced the banks to mark their derivative losses to market. That is, IndusInd could no longer defer their losses and was forced to report the full 1500 to 2000 crore loss in a single quarter. So I hope that you understand how the bank's derivatives accounting principles turned completely into a disaster. तो इसका result क्या हुआ? The next day, absolutely panic. IndusInd stock crashed 27.16%, its worst single day fall ever, wiping out millions and billions. It fell from 900.50 to 655.95 the very next day with a trade volume of 101.08 million.
को समझाया ये जो एक तरह का इसको भी स्कैंडल ही कहेंगे या इस तरह की जो न्यूज़ आई है इंडसेंड की जिसने मतलब कि सभी इन्वेस्टर्स के मतलब कि रातों की नींद उड़ा दी। तो उसमें आप देखेंगे कि इतना बड़ा चेंज जो आया है, तो मैंने सोचा एक बार मैं आपको प्रैक्टिकली ये चीज़ दिखा दूँ। तो आप देखिए 10 मार्च को, आप राइट साइड में देख सकते हैं डेटा। आप देखिए 10 मार्च 2025 को ये मैंने आपको बताया कि न्यूज़ आई थी। तब देखिए ये जो स्टॉक है ये क्लोज़ हुआ था 900.50 पे, ठीक है? तो लगभग 900 पे ये इसका स्टॉक प्राइस था उस दिन 10 तारीख को जब ये न्यूज़ आउट हुई। तो जैसे ही लोगों को पता चला, कॉन्फिडेंस बिल्कुल डाउन हो गया, लोग घबरा गए कि पता नहीं इसने और क्या-क्या चीज़ें छुपा के रखी है इंडसइंड बैंक ने, तो इसकी तो सारी फिगर्स, इसके फाइनेंशियल सब तो ऐसे दे फेल्ट लाइक उनके साथ धोखा हुआ है कि ये तो क्या पता है जो हम चीज़ें देख रहे हैं वो सच है भी कि नहीं। तो आप देखेंगे कि ये जहाँ ये आपका इंडसइंड बैंक का स्टॉक देख लो कैसे एक साइडवेज में, ना बहुत ज़्यादा नीचे ना बहुत ज़्यादा ऊपर, जबकि ओवरऑल देखोगे तो ये ग्रो ही कर रहा था। एकदम ये 10 तारीख के बाद आप 11 तारीख को देखेंगे तो इसमें आप देखिए 27.16% का इसमें डिक्लाइन हुआ है। एज यू कैन सी 900 से सीधा 655.95 पे ये क्लोज हुआ। तो सोचिए सिर्फ एक इस न्यूज़ से कितना बड़ा झटका लगा है इंडसइंड बैंक को।
Second result, leadership shakeup. The chief financial officer of the bank resigned, and the CEO's term was also cut short from 3 years to 1 year. However, the Reserve Bank of India stepped in, dismissing market speculation and issued a public reassurance, saying that IndusInd Bank was financially stable with a 16.5% capital adequacy ratio and 113% liquidity coverage ratio, which is well above the regulatory requirements. In fact, even after considering this 1500 to 2000 crore hit, capital ratios decreased only minimally. The Reserve Bank also directed IndusInd's board to complete all the remedial actions within the quarter and keep full transparency. This involvement by RBI worked to an extent as the stock rebounded by 4.38% the very next day. A full-blown banking crisis was avoided, but the damage to investor confidence was already done. Now the big question is this a temporary storm or the beginning of something bigger? Let's do the fundamental analysis to see how IndusInd Bank in actual numbers and does it align with the Reserve Bank of India's expression. IndusInd's core financials have been very strong in recent periods even after controversies made headlines, like during the financial year 2024 it earned a net profit of 8950 crore, which is a 21% increase from the previous year. During this December quarter also it earned a profit of 1401 crore, which is a drop from the previous year. But this drop was largely due to the heavy provisions, up to 80% made in anticipation of this derivative scandal and some asset quality weakness. Importantly, even after this hit, the bank remained profitable, indicating that its core business still generates healthy earnings. As on December 2024, its gross NPA stood at 2.25% and net NPA at 0.68%, which is similar to top banks like ICICI and Axis Bank. Its capital adequacy ratio is 16.5%, way above RBI's requirement, so there is no solvency risk here. Provision coverage ratio is also at the range of 70%, meaning ample buffers are set aside against potential losses. Let's talk about its deposits and liquidity. IndusInd Bank deposits grew 11% year on year to 4.09 trillion rupees by December 2024, with low-cost CASA deposits making up to 35% of total deposits, a very respectable figure. To increase confidence after this incident, the bank reportedly raised 11,000 crore rupees via certificates of deposit in March 2025 to support short-term liquidity. As of March 2025, IndusInd's price to earning ratio was around 7.4 and price to book value around 0.8, which is extremely low for a private bank. In comparison, HDFC and Kotak trade at PE of 18 to 20 and PB of 2.5 to 4, meaning investors are pricing IndusInd Bank like a PSU bank, despite it being a private sector giant. So basically a fundamentally strong stock available at a very cheap price. Return on equity for IndusInd Bank is 15.2% even after the controversy. The bank isn't on the verge of collapse, that's for sure. But the issue is that the market doesn't fully trust it now, and that's why the stock is down so much. Let me show you IndusInd Bank's roller coaster ride over the years. IndusInd stock has been one of the most volatile stock in the banking sector. It was at an all-time high of in 2038 rupees in 2018. But due to COVID crash in 2020, it crashed to 235.55 rupees. Then as the overall market was recovering, it also started rebounding and touched 1576 rupees in 2024. But again, finally, because of this derivative scandal, it declined to 606 rupees, which is a multi-year low. Let us, understand some things about IndusInd Banks technically. Next support level is at around 600, which is the level of 2020 COVID-19 crash. If IndusInd stock breaks that, then we are in a deep trouble. And the next resistance is at 900 to 1000. Can IndusInd regain it and break out of it? Let me also share an interesting point here. Investors who bought IndusInd Bank stock at rock bottom in 2020 made multi-bagger returns. Will it happen again? To give you an idea that how much IndusInd Bank is, stable financially, just look at these figures in the table where we have compared its financials growth, valuation, and asset quality with HDFC and ICICI Bank. You can see the net interest margin is overall in the same range as per HDFC and ICICI Bank. CASA ratio is also, very good as compared to these giants HDFC and ICICI Bank. So what is the takeaway from this table? That IndusInd Bank, despite recent setbacks, remains financially strong with a solid capital adequacy ratio of 16.5%, manageable asset quality as gross NPA is around 2.2%, and a steady profitability. And its undervalued status is icing on the cake because this low stock price is due to market sentiments caused by accounting discrepancies rather than any solvency risk. Finally, I want to conclude it by saying that IndusInd Bank is at a turning point, meaning on one hand trust is shaken. One more mistake by the bank and investors will run away. Leadership shakeup also done by the management, as CFO has resigned and CEO's term is cut short. So there is uncertainty ahead. But on the other hand, promoters are willing to buy more stake of IndusInd Bank, suggesting a strong vote of confidence. For instance, the Hinduja Group clearly sees long-term value as they showed their interest in increasing their stake to 26% as they are confident about the bank's future trajectory. CEO Suman Katpalia ji and the board have commissioned an external audit by a reputed firm to thoroughly investigate the derivative accounting discrepancies. By proactively involving outside experts, IndusInd aims to reassure stakeholders that there are no more surprises hidden beyond this. And let me tell you, in banking, honesty can go a long way in rebuilding trust. With a price to earning ratio of 7.41 and price to book value of 0.82, IndusInd Bank is trading at a steep discount compared to peers like HDFC and ICICI, making it a potential value buy. So is this a crisis or an opportunity? Drop your thoughts in the comments below. And if you found this deep dive into IndusInd Bank's recent controversy valuable, hit like, share and subscribe for more high quality financial analysis. I will see you in the next video to unfilter another financial issue. Until then, Namaskar.